Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. What a day it has turned out to be for the market. Another 1,000-point up move coming in on the Sensex. In fact, the Nifty coming very close to that 21,500 mark as well. And if you look at the sectoral indices, IT index, that index has been up somewhere around 8 to 8.5% in a matter of 2 sessions. While we were talking about the Nifty IT index throughout the day, it's the banks, the Nifty Bank index, which recouped all of its losses, managed to hit a fresh high, clocked that 48,100 mark for the first time ever, and all thanks to the HDFC Bank. Last hour uptick coming in on that particular counter. I think it staged a very smart comeback from the day's low on the back of FTSE rebalancing. Remember, it has a 30% weight on the Nifty Bank index. A lot of these, the kind of up move that we saw in the last hour of trade on the Nifty Bank index is, attributable to the rally or the last hour spurt that we saw in the shares of HDFC Bank. In fact, even the Nifty PSU Bank index saw a very smart uptick. Around midday, these two indices were, kind of underperforming the market. But last hour saw the likes of SBI and PNB also hit fresh 52-week highs. And the only missing puzzle with respect to Nifty PSU Bank has been filled. That gap has been filled by SBI because, SBI was one stock, from the PSU banking pack that had not done all that well. It hadn't really fired, but today that missing part of the puzzle has also, that gap of course has also been filled, given the fact that the largest public sector bank SBI also managed to hit a fresh 52-week high today. IT, as I was mentioning, in fine fettle on the back of signals from the US Federal Reserve that they will be looking at rate cuts next year, and the cool off in dollar index boding well for the Nifty metal index as well. So metals as a pocket was also shining in today's session. Looking at some of the movers in today's session, a lot of these names, the top 3 gainers on the Nifty were from the IT pack. No surprises there. HCL Tech record high, TCS Infosys not really at record high, but nevertheless 5% a piece. These are the kind of gains that we saw on these large cap IT names. SBI 4%, Tata Steel nearly 3.5%, NTPC 3%, Tech Mahindra Wipro, I mean, you name it, IT stocks, you will find that most of them have gained anywhere between 3 to 5% a piece. On the flip side, what didn't do well today, Nestle, HDFC Life. So life insurers continue to lag behind. Yesterday as well, they were in the red, of course, because of negative news flow. So HDFC Life, SBI Life extending those losses. Bharti Airtel on the back of a downgrade by Morgan Stanley, down in trade. Bajaj Auto, Maruti, Eicher Motors, some of the stocks that didn't do all that well. And from the private banking name, you had Kotak and Axis. They were among the laggards, not participating in today's rally at least. Aside of that, if you look at some of the other counters from the mid-cap end of the markets, PVR saw a block deal, so that stock was under pressure, even though it did manage to recoup most of its losses. KFintech, 20% kind of equity changed hands, and on the back of that, the stock was down under pressure today. I think 3 to 4% is the kind of losses it saw towards the end of the session. And some of the other movers of Max Financial, they were losers rather. Motilal Oswal, Aegis Logistics, Bajaj Holdings, KFintech, as I mentioned. And on the Nifty 500, on the gaining end, you had JM Financial. That stock rallied over 10%, Zensar, Jubilant Pharmova. And some of the mid-cap IT names also did fairly well. But on that note, let me bring on board my guest for today. Joining me is Kunal Rambhia of the streets. Great to have you, Kunal. Historic week for the markets. 15 days left for the month to end and for the year to end. 21,500 is already almost here. What does it look like from here going forward? What is the sense you get? 22,000 next week itself, or do you think we could see some bit of consolidation now?
Good afternoon to you and good afternoon to all our viewers. So yes, certainly, Aditi, the crazy move which we have witnessed in the indices in this week, specifically on the Nifty chart, where on the futures we are witnessing right now 21,550, 560 levels, and there is no pause at all. Even if you look at the intraday charts, they are just making higher top, higher bottoms, and the strength is enormous, which is just gonna show us probably 22,000 mark, as we were discussing just a couple of weeks back. I think we were discussing about 21,000 mark. Now we are discussing 22,000 mark. Certainly, yes, that's a super strong counter. Index, actually the support to watch out now will be 21,350. So if the future falls below 21,350, then I think we might see some kind of pause. Otherwise, consolidation to positive rally might just continue on Nifty.
All right, that's the view on Nifty. But Nifty Bank, 48,100, topped. Uh, of course, Street is wondering whether 50,000 will become a reality anytime soon. But on the Nifty Bank index, at least for the next week, next 2 days, perhaps Monday and Tuesday, what is the kind of resistance level you'll be watching out for there?
So again, as we saw, this index has been more or less laggard, and we have seen kind of traction coming in. So the last half an hour party was just because of HDFC, but otherwise almost all counters were flattish too, with the positive note, but they are underperforming. So yes, underperformance is likely to continue even going forward. 48,350 to 400 levels on the spot bank Nifty are something to watch out as a resistance, and immediate support on the chart is 47,750. So these are the two levels to watch out for. I think for the next 2 to 3 days the bank Nifty should remain in this particular consolidation zone itself.
All right, but about some of the counters on the Nifty Bank, HDFC Bank in particular, after the kind of up move or the kind of last hour surge that we saw, do you think it is at risk of some bit of a consolidation, or do you think it will continue to play catch up? Because if you look at a YTD basis, some of these large cap banks are yet to play catch up, right?
Very true. So, year to day basis, yes, but at the same time, in fact, last 2 years, 2.5 years, these banks have been more or less into sideways consolidation itself. And the recent downtick which we saw in HDFC Bank started somewhere in May 2023, where the counter was trading at around 1750 levels, and from there it's still down. So, if I make a downtrend line on the chart, still it's not given the breakout, and the breakout is placed right at 1655 to 1660 spot levels. Though it tried giving the breakout today in the end, the last half an hour session. But I think it was a failure again. So I'll watch out for this breakout. If HDFC Bank manages to cross 1655, 1660 mark, then I think this rally might just continue till 1725, 1730. But otherwise, this seems to be the strong resistance for HDFC Bank as of now.
All right, that's the strong resistance to watch out for on HDFC Bank. But let's talk about the elephant now, the elephant that has started to dance, SBI. As I was mentioning, the missing piece of the PSU banking pack. This was the only missing piece, and that gap has been filled. 52-week highs on SBI, 650 kind of levels. Would you advise a trade here now, SBI?
Certainly, just 2 days back, it gave a first breakout of a downtrend channel, which was at around 620, and since then we were long on it, and the view was very clear that it will outperform. But the way it has performed today was actually beyond syllabus. It is up by 4%. Now the risk-reward ratio for the new position at this level is a little scary. So what I would suggest is to wait for some kind of consolidation or bit of correction. If SBI is available to us, let's say at around 635 to 640 levels, I think that would be the good level to initiate the buy. Stop loss on this will be 620. I think we can expect the levels of 675 to 680 very soon.
All right, stop loss of 620 on an SBI. But what about a Bandhan Bank? This stock has made a good comeback today. It was fairly buoyant, but it did see some bit of consolidation in the middle, right? And the stock per se hasn't moved much, so valuation should be looking comfortable. But what about risk reward for a Bandhan Bank? Do you think that's looking attractive?
Certainly, yes. So if I look at the Bandhan Bank chart, it's still looking very attractive. And in fact, it gave a fresh breakout in today's session itself. If you look at the present levels, it's trading at around 253. One can certainly initiate a buy at the present level from 253. We can expect the target of around 265 to 270 in just very short span of time. The stop loss in this can be around 240 to 245. But again, if you're taking a derivative position, then watch out for the drawdowns also, because the counters have moved up significantly, right? So even if a minor bit of correction comes in, the drawdowns can be huge. So the levels which I'm sharing are actually from the positional point of view. But from the short-term perspective, the stop loss can be 245 and the target can be 265.
All right, target of 265 there to watch out for. But from banks, let's shift gears and talk about an IT. Phenomenal move over the last 2 days. The index itself, the IT index itself has been up 8 to 9%. Although IT stocks are still, some time away to hit from their record highs, right? But HCL Tech is one stock that has hit a record high. Here on the likes of TCS, Infosys, HCL Tech, which one is looking more attractive on the charts? And secondly, should one stick to large caps now, because mid caps have seen a good run? Would you say that mid cap IT offers good risk reward at these levels?
To be very honest, Aditi, again, there are two types of traders, right? The one is the one who captures the momentum. So for them, ITC and tech, this counter is offering me good risk reward ratio from the long side.
Right. What about the FMCG pack? The likes of HUL, ITC. Today, I think last hour, HUL saw a good spurt. It ended at the day's high. I don't know what happened here, but it kind of staged a very good comeback, recouped all of its losses from the day, ended high by about 0.5% or thereabouts. ITC, on the other hand, the stock has been stuck in a range. Between the two, do you see a trade here, HUL or ITC?
Being very honest, in the afternoon only, we were discussing about HUL in our office. Reason being, now 15 days remaining to expiry. So if someone wants to strategize, this counter can offer a good straddle strategy. That's short straddle and long futures. Because on the chart, the extreme bottom which I can expect on the HUL right now is approximately 2500, and the counter in the morning was trading at around 2510. So the strategy here is very simple: go long on the futures and create short straddle. Though it's a risky strategy, but it's still offering around 5% even if the counter remains at the present level. Now, if we come to the price action, the downside is very much limited. So yes, one can certainly select HUL among the both counters. That's HUL and ITC. I think HUL with the stop loss of 2500, one can go long, and the targets on this can be 2550 in 1.5 month time from here on.
Right. From FMCG, I want to shift gears and talk about a Maruti. I think there was a sudden dip in the shares of Maruti around 2 p.m. It did manage to recoup, in fact, it did manage to come off the day's low. But what's happening here? I mean, there was a sudden dip and then it recovered during the day.
So in fact, we were bearish on Maruti, and that's something which we discussed across the media channels. The only reason was it was showing a weakness on the chart with the extreme volumes right at the peak of the Maruti. So yeah, we were short, but then this spike actually achieved our target also. Now from here on, I expect the Maruti to get the support of around 10,150 mark. If it manages to hold this 10,150 mark, one can go long on this, because again, it's offering very good risk reward ratio. The stop loss on this can be 10,000, and the targets can again be 10,600 to 650 levels. But I don't know the reason for the fall, but on the chart, this seems to be a good strategy as of now.
All right. Anything from the electronic manufacturing space that's looking attractive on the charts? Amber, Dixon, these stocks have had a good run. And today we had UBS initiating coverage on these stocks. More upside from here, and what are the kind of levels you'll be watching out for, especially for a Dixon Tech?
So Dixon Tech is the counter, actually, which showed the extreme volume on 12th of December, where the counter hit the all-time high. That was around 6,780 or 90 kind of levels. And from there, again, some kind of profit booking was seen. I'm not really keen to pick up any of these counters. The only reason being, number one, they're the extreme top level. Number two, the retracement from the last previous rally is still pending. So we'll watch out for this space, but not as of now. We'll wait for some kind of consolidation and correction to happen, and then we'll revisit again.
All right. From the multiplex space, PVR, we saw a block deal. Still, it did manage to end off the day's low. And looking at the charts for the last 1 month, Kunal, 7% kind of an uptick. But would you bet on these particular stocks, PVR, for instance?
Not really, Aditi, again, because from September 2022 so far, the counter is in sideways consolidation. It was about to give the breakout, in fact, today, but it failed. So I'll watch out for the levels of 1800 levels on PVR Inox. Once it manages to cross about 1800, we'll just revisit and we'll see whether it's gaining the momentum. And if yes, then with the stop loss of 1550, we'll think of initiating a buy, and then the targets can be as high as 2000 levels. But for now, I'll watch out for this counter, but I will not initiate a buy at this level.
What about the prestige estates? Down 4% today. In fact, if you look at last 5 sessions cumulatively, it's down somewhere around 6% or thereabouts. At a time when realty stocks are doing well, this stock, hasn't been able to fire over the last 5 days at least. Would you watch for levels on the downside here, or would you expect an uptick going forward?
Just 1.5 months, and the counter has gone up by almost 60 to 70% now. That's crazy kind of rally. And of course, so at these peak levels, the consolidation and a price correction is very much likely. So as you rightly mentioned, this consolidation, we'll have to just see whether this consolidation is ending into time correction or the price correction. If there is a price correction, then the levels to watch out for will be around 975 to 950 levels. If it manages to hold those levels after consolidation and correction, then we might revisit again. But otherwise, these counters which are at the peak level, where especially when the markets are also at the peak level, I would really avoid these counters for longs from here.
Right. What about a Mankind from the pharma pack? How is it looking in the on the charts? Because today, even this stock saw a spike in the last hour of trade.
Correct. But this counter has not really performed since July. It's been in sideways consolidation. The trend is certainly positive, but sideways consolidation on cards. So if the view is positional, then if the stop loss of 1800, one can certainly hold on to it. And if the counter manages to cross around 2000 levels, then the levels of 2400 can also be on the chart. So yes, we are long on it, but the view is very positional, and the stop loss which we have maintained in house is around 1800 levels. So one can initiate a buy on the dip, but not at the present level, because again, the risk reward ratio is unfavorable. Let it come down, cool off a bit, come near to 1800 mark, then you can initiate a buy.
What about the metals pack, Kunal? Dollar index cooling off. That's boding well for metals clearly. Metal pack was up and about in today's session, particularly for a Tata Steel. Would you see or would you expect it to be a breakout stock going forward?
Certainly, today itself, the breakout came at 135, closing at 136.50. So we initiated a buy on this at the end moment. That's at around 315. The stop loss on this is now 125. That's a very deep stop loss. But at the same time, the targets on the chart can be as high as 170 to 175. I'm wondering as to, if these targets are achieved, where the Nifty will head to. But yeah, I think this counter has the potential to show those levels. So yes, extremely bullish on Tata Steel among the entire metal pack.
All right, Tata Steel looking attractive on the charts, but from the life insurance space, the likes of HDFC Life, SBI Life, would you say that the weakness that we have been witnessing over the last couple of sessions, do you think there's a pattern here and the weakness is likely to continue going forward?
Certainly. So among the entire pack, today only morning we shorted HDFC Life. The only reason being the extreme volumes are seen. And if you see the last 3 to 4 days back, there was a massive positive move. And suddenly that's completely negated and it's down below those previous levels also. So that triggers the alarm for the technical guys to short the counter. So yes, we have initiated a short on this HDFC Life itself. The stop loss is now 695, and the targets on the lower side to watch out will be around 575 to 600 kind of levels. Now again, this is a positional view, but yeah, one can certainly ride the rally if this emerges on the lower side.
All right, that's the view then. And PI Industries is one stock that has been in focus. It did shed quite a bit of weight in 2 to 3 sessions. Uh, is the setup pretty weak on the charts?
Not really. Again, 6 months sideways consolidation. And if you look at the range, it's been within the range of 3,300 to 4,000 levels itself. Today also, it managed to hold these 3,300 kind of marks. So, in fact, this is a level where I'll watch out for the reversal signs if the counter manages to continue uptick after a bit of consolidation. Then, with the stop loss of 3,100 to 3,150, I think one can initiate a buy. And again, the position targets of 3,650 to 3,700 can be expected. But again, these are the counters which are available near to those support areas. That's why we are thinking of contra. Otherwise, we wouldn't really go contra on these kind of sell-offs. But yeah, the volumes are pretty high near to the low. I think one can think of initiating a buy on the reversal signs.
All right, PI Industries warranting a buy as it is near the support levels. But what about a JM Financial? This stock has cleared the 100 rupee mark, 52-week highs, and today it was up 13%. YTD basis, the stock is up 36%. A lot can be attributed to today's move itself. How would you view this one, or how would you trade into this one going forward?
So, Aditi, again, since 2018 so far, this counter has been in a negative consolidation, though the range is very wide. I mean, on the higher side, we saw the levels of 116, 117, and on the lower side, we saw as low as 50 levels. So, I think this time the volume is really supporting the breakout. One can definitely watch out for this. I think let's wait for a day or two. If it manages to sustain above 100 levels, then with the stop loss of 90, one can certainly initiate a buy. It's going to be a positional bet. The targets can be as high as 135 as the first target, and second being 160 levels. But again, just one thing, the momentum which we have seen on the counter today, it should continue for a day or two for this view to remain valid.
All right. Anything from the railway and defense pack that's looking attractive now? The rally, I mean, it doesn't really seem to end. So higher highs for some of these stocks, and which one would you prefer at the current juncture?
In fact, I have a list of whole railway stocks itself. My junior told me today evening. So I am just watching out for one counter, and that's IRCTC. The only reason being this momentum has just started after a broader consolidation of almost 2 years. So IRCTC is offering good risk-reward ratio from the longs point of view. The way we discussed about Wipro among the IT pack, almost the similar technical formation is on IRCTC. So one can certainly watch out for this counter. The stop loss on this can be 755. So presently it's trading at 780. We'll wait for some kind of consolidation and correction to come in. 755 can be the good stop loss, and the targets on this can be as high as 900 levels to watch out for. But other counters which have already delivered 5x and 6x in last 1 year, I would stay away from those counters.
Want to get in your thoughts on NBFCs, particularly Shri Ram Finance. According to some brokerages, it is the candidate which will be replacing UPL on the index, right? So, the counter was down 2% today, and even on a 5-day basis, just about sideways, so to say, 2% kind of an up move coming in. But your thoughts on the charts of Shri Ram Finance?
Certainly, the trend is very much intact and it's very strong. It's clearly making higher top, higher bottoms also. But in these trending counters, we wait for the correction to come in so that we can initiate a buy, because we have seen the kind of weakness on the chart. I think we can easily get the counters near to 2000 levels. So one can initiate a buy at 2000. The stop loss on this can be 1950-ish kind of levels. And again, the trend might just continue for long. The target I won't be able to set right now because there is no pattern as such. It's a channel formation. So we'll just buy near the support. We'll maintain the stop loss and we'll hold the position for longer.
All right. Kunal, before I let you go, what would you be trading into for next week? Anything that's catching your attention, at least for the next 4 to 5 trading sessions?
Certainly. The first one is the Asian Paints. I think this counter managed to give a breakout today. So the spot level is trading at around 33.10, 33.12. One can certainly initiate a buy on Asian Paints with the stop loss of 32.75, and the targets on this can be as high as 3,500. And this target is for the expiry itself. The second is Indiabulls Housing Finance. I mean, this counter has really massively opened the new trend. In fact, it was in ban. It's coming out of ban, I think, on Monday itself, because the closing was near to those 80-ish level for the counter to come out of ban. One can watch out for this counter. The stop loss on this can be 218, and the first target can be as high as 250 levels. And the third is a mid-cap bank, which is Indian Overseas Bank. Again, this counter has managed to give a head and shoulder breakout, and the breakout was placed at around 44. It has managed to close at around 44.50. So with a stop loss of 42, one can watch out for Indian Overseas Bank, and the targets can be again as high as 52 levels. So these are the 3 counters to watch out for next 15 days, or just not 1 week, but at least till expiry of this month.
All right, those are some of the stocks that are looking attractive, and Kunal may be recommending them for the next 15 days at least. But with that, Kunal, thanks a lot for taking out time and joining in and sharing your thoughts with us. We'll see whether we manage to hit the kind of levels that we've never seen. 22,000 on the index and 50,000 on Nifty Bank. Those are the next those are the next levels to really watch out for. But of course, it has been a historic week for the market, and we've seen a 7th straight week of gains. And the Nifty, of course, around that 21,400 mark. With that, thanks a lot, Kunal. Wish you a very, very happy weekend, and hopefully we come back fresh and ready to see new highs on the index. But from me as well and the entire team that put the show together, thanks a lot for tuning in. Have a great weekend and have a great evening as well. And come back and join us on Monday morning with our market shows. From me and the entire team, thanks a lot. Stay tuned to Moneycontrol for all your other news and updates.